Well, I'm also recording too, so if you want me to, yeah, I might post it, but I can post it privately if not everybody wants to be on, publicly posted on YouTube. Okay, bet then shouldn't really matter. Let me make sure everything is good. Wait, can you one of you guys speak?
Bonjour,
There
bonjour.
you go. Now it works. Okay, so let me go through the 2025 model. This has taken me a long time to develop. Mainly, and most of it is just intuition. So I don't know how easy it will be for somebody else to trade this model. But it takes a lot of back testing and studying to kind of get the hang of it. Anyways, trades go from 9:30 to 12, and when I mention anything about time and if it's related to trading, it's always New York time. So on your trading view down here, UTC 5, Toronto, New York, you need to have that checked.
Okay.
Because that's the time zone I'm referring to whenever I talk about charts. It's just easier that way. So I do have people that watch me from like Dubai or Germany, and I can't always
9:30 to 5 p.m.
9:30 to 12. Yeah.
Oh, 12. Okay.
Then there's like a few things that I do, like I journal thoughts, operate in stable environments. I do certain planning on Sundays and Saturdays. So you might not do that, but that's just what I do. So there's a few more things that are custom to me, but I don't trade when there's no news. So if you go to Forex Factory, that's the one I use. You go to calendar at the top, and then you click on the month here, and you go from any Sunday to any Saturday, and you can see all the news. I then go to the top right, filter. I only have the red and orange checked, all types of events, and then the only currency I have is the United States dollar. I apply the filter.
Three folders.
Anytime there's a red folder, I trade. If there's no red folder, I don't trade. If there's an orange folder, sometimes it can be red, depending on what provider you're using. But you're like, this one could be a red folder on different things, depending on what you trade. So for Forex, it wouldn't be high impact, but for a stock market, it would be high impact. Or for like Bitcoin. So it can change depending on. There's another one here in TradingView. There's the same one built in, an economic calendar that's built in. So same thing from a Monday to a Sunday, or from a Saturday to Sunday. You can see all the high impact news. Any 3 bars is high impact, and that's just like a navigator. Like, you use that to plan your trading days. You look at that at the beginning of every week on Sunday, and you look at, okay, which days am I gonna trade? Anyways, that's the first kind of filter. No holidays. So sometimes there can be these gray folders, bank holidays, or like Christmas, whatever. No holidays. Or half days where the market closes early. And you stop after you get a win. And unless, so I mean, this is just in the beginning. Was just for me. I don't do this anymore. If I get a win, there could always be another trade that wins again. I've seen a day have 3 winning trades at the same day. So it could be worth to keep going. It's just usually there's only gonna be 1 win a day. Yeah. So, anyways, execution process. You don't need to understand what it is. I'm gonna go through it slowly, but the first thing you're going to do is determine whether you're going to be buying or you're going to be selling the chart. Determining on where prices with midnight and 8:30 opening prices. So on a chart, I've got an indicator, ICT NY opens. I might be able to share that, but I would just try and search up what I have typed in, like ICT NY opens, and then it's by Josh Foremost something. It's got 30 users, so and then I have certain settings for it where it's just going to show the 12 a.m., 8:30 different colors. So 12 a.m. is in blue, light blue, and the 8:30 is in a dash green. So I have these prices anchored on my chart. And the way I'm gonna use it is the blue lines run from 1800 to 1800. And the reason why I use 1800 as the opening day price is because that's when the markets reopen again. So every day the markets close at 5 p.m. for 1 hour, and then they reopen at 6 p.m. That's the start of a new algorithmic day. Within that day, I mark out the midnight opening price, 8:30. At any time, if we're above the 8:30 opening price and the midnight opening price, I look for a sell, and if we're beneath, I look for a buy. That's simple. So that's the first thing. Then I look for a sweep of short-term 5-minute swing that's against the direction you want to trade in. So if I'm looking to sell price, I'll look for on the 5-minute chart up here, the 5 minutes. I'll look for a short-term price swing that goes that runs out. So a price swing that goes initially in the direction I want to trade in. So if I'm selling, see how these few candles go down? That's in the direction I want to trade in. And then the price swing that runs it out is in the opposing direction that I want to trade in. Like this. I look for that. As soon as I have this scenario, I mark it out with a line here, a dotted line, and I write 5 minute on it as a sweep. So I'm basically looking for this pattern, something like this, above 8:30 and midnight, and then I would look to sell and enter a trade to bring it lower. And if it was to buy it, I would look for something like this, an initial move higher, and then a move lower, and another move higher. The reason why I do this and I always wait for a sweep is because if you think about how psychologically how the markets are operating, let's say you're a billionaire and you want to try and get your position filled, you need a lot of people to go against you. So for you to get the price you want, you need a lot of people willing to lose money, or to sell take profits at that level, or enter new positions and lose money at that level. Now anytime you have a lot of orders going both ways, price is usually going to go sideways. And that's why if you're looking for a very large move to occur, you always need some sort of fake out. So some fake move that's going to be in the initial direction you want to go into, and then very quickly you're going to have that run above that. The market, the average person at this point is going to be thinking that we're trending higher, and it has to be at a key time. That's another thing, a very key time between 9:30 and 12, where there's a lot of people on the charts. If a lot of people are opened up the chart in the morning and they see that the market is going down, if it continues to make lower lows, eventually it's going to get to a point where it's so oversold beneath midnight and 8:30. All you need is a nice move in a certain direction you want to trade in. So there was one here, and then there was one here. So there was these two up close candles that ran initially in the direction you want, and then we come down and we sweep out this low. Once we take out the low and we close beneath it, you then drop down to a lower time frame at the 1 minute chart, and you would look for, you'd zoom into that cluster price action, and then you would look for what's called an inverse fair value gap or a fair value gap. So what that is, a fair value gap is basically a space within one candle. It's a 3 candle formation, so you need 3 candles. We're going to take these 3. And it's a space that goes from the high of the first candle to the low of the next candle. So the gap, you can kind of see it, would be here. And there's like that open space. And then price comes down, you would enter. Doesn't matter where you want to enter, how you want to enter. You can pick any fair value gap you want. but I would have done something like this. Put my stop generally at the low, the whatever fair value gap we have at the body's low, but I always go for a minimum of 20 points. So I would just go for here, this low. Again, the way you place your stop, again, that's up to you. And then I would aim for a minimum 4 times whatever I'm risking. So there's like a number here, 4, and 4 times what I'm risking. And then I would go for the next 5-minute short-term high after that. So it would be right up here, 4.11. And the trade wouldn't have been concluded. Well, actually, it would have lost overnight, but
Wait, I want to see it all the way through.
Actually, I don't even know if it would have lost. Oh, no.
Would have lost.
It would have lost eventually, yeah. But
no,
also,
but the first one.
Huh?
The first one would have won. The
Yeah,
one
the
before
first one
that.
would have won. Yeah, the first trade would have won. Another thing I have is a session background indicator. This just highlights 9:30 to 12, so it makes it easier for you to see exactly when you'll be trading, the zone in which you'll be trading. And then there's another rule I've added. This is another indicator. This one I created myself, so I'd have to publish it. But I'd have to just publish this, and then it's not hard. I can just publish it. I'll do it later though, and then you guys can use it. But it's basically what it does is it goes back through 30 days, looks back 30 days, and it from 9 to 12, it takes the average range, so the amount of points. So if I use a measuring tool from the low at 9 a.m. to the high at by 12 a.m., so right over here, see this is 302.75 points. What it will do is it'll turn red if it's bigger than the average in the last 30 days. So here it turned red when it reached a certain point. I don't know what that level exactly was, but from 9 a.m. here, 358 points. So the average is somewhere like 320 points at this time. And then if it turns red, you just basically stop trading. That way you don't have to manually calculate the average yourself. You can just look at the indicator. So, yeah, that's how you use that. And then, yeah, that's basically all the rules there is. And I have a lot of examples on like different sweeps that I can just look at here. I just don't know if okay, yeah.
And you can send this to us, right?
Yeah. I posted the link in the Discord, yeah.
Okay.
So over here is an example in a key time from 9 a.m. to 12. You've got an initial run higher, and then we run down the dotted line. Don't pay attention to anything else but the dotted lines. We run out these stops, and we have displacement in the opposing direction. This is that same area zoomed in. You can see zooming in once the dotted line gets taken out. You just wait for a fair value gap. In this case, I wouldn't have been able to enter. It would have been too high up. I could have, but I would have had a very wide stop, or I would have used what's called an order block. But you don't have to use an order block.
Do you only enter at the fair value gap?
Yes, but I could enter order blocks. That's basically these. It's a little harder to explain, but it's that when a down close candle is immediately met with an up close candle that closes above it, you draw out that line and it uses as support. It's kind of like a supply and demand. But the fair value gap in this case, the first one would have been this inverse one there. From that candle's low to this candle's high, there's a space here.
At what point in the fair value gap do you enter? Could it be
it doesn't have to be equal? The first fair value gap. It just has to make sense. Like, you don't want to enter on this fair value gap and then, or you don't want to wait and like enter on a fair value. Let's say you use this one right over here. Like, you missed this one and you want to wait for the next one. You don't want to
Yeah.
enter here once it closes above it and it invalidates it. It closes above it and inverses it. Then you want to go long when it comes back to it and have your stop all the way over here. Because this doesn't make sense. A 50-point stop when the average range is like, when the range currently is 168 points. For you to go 4 times that, you'd have to go somewhere like really, really high. So
And then what if you run out of like
Hmm?
Like what if the price just doesn't come back to the fair value gap? Do you just
Sometimes
do
it
a no?
happens. So there's no trade. There's no trade then. But sometimes price will be very excited, and you're gonna have to have a stop
But
that's.
can you enter off of an inverse, or you just
Yeah.
wait for a retest of
I
fair
could have
value gap?
I could have picked this inverse here, and then I could have put my stop at the low of this fair value gap, and 4R would have brought me to the high of the day, and that could have made sense. You know, like if it wasn't near the end of the day and we had more volatility in the market, maybe this would have worked instead of just going sideways. You know, but
Yeah.
how you place your stop, it doesn't matter. However, what I'll say is you want to try and get it as close as you can to the lowest low. So whatever made the sweep, whatever low is priced in as we sweep, the dotted line, you want to try and get as close as you can to that low. And sometimes it's okay if it's not at that low, like if it's at the body of the lowest fair value gap's candle. So this fair value gap is basically just beneath the entire fair value gap. But sometimes it'll go past the fair value gap and it'll wick in. And it's happened to me before where my stop was too tight and I got stopped out and then it went my way. That happens sometimes, but not often. Most of the time, it's not going to dig in too deep.
So it's best to put it at the 5-minute short-term low in that case.
Yeah, but again, the best trades will never fill the entire fair value gap. So theoretically, on a lot of your trades, you could probably enter here and have your stop at the low of the fair value gap. But sometimes that won't work. Some in this case.
Come in.
Right.
You work tomorrow?
Yeah, I work tomorrow.
Are you done early or regular time?
No, I start later and then I finish later.
Yeah. What time?
I start at 10. Hi, Axel. I start at 10 and I finish at 6:30.
Yeah.
But I have my my cousin's truck.
Oh, okay. Do you remember where the Shintanis are?
Yeah.
Go straight.
Okay. Wait.
Or you can shower if you
No.
want.
Actually, can you text me the address because I don't remember.
I'll give you my address. Yeah, I'll let you know.
Okay, yeah, let me know.
You doing something with Aaron?
Probably go to the Shintanis tomorrow.
What? The Chinese?
Yeah, we're gonna party.
Oh, nice. What's a Shintani?
That's Chalet's family's house. Remember we went?
Yeah. Nice.
Yeah.
Hope you have fun.
Is
Yeah, so basically, rule of thumb, just put it wherever it makes sense. As close as you can to the low, but it could be this low instead of that low. It could be the low of the fair value gap if your stop is wide enough. Like if you have a 30-point stop and your stop is at the low of the fair value gap, then it could make sense. It's just honestly, that's gonna come with experience of back testing and forward testing the live model. That's why you have to journal. You have to log the trades and keep track of it. You can't just trade whenever you want. You have to do your homework basically. But we can go through a lot of examples through the beginning of the year. No. We'll go to January. And you see some days you had like 3 trades in one day. Most of the time, though, there's going to be 2 trades a week on average.
But on a live account, have you actually done 3 trades in a day?
Yeah. Well, there aren't all wins, but for this model, yeah, there's been some days a year. A lot of these trades I actually took to, not all of them, because at the beginning of the year I wasn't trading much. But in March, I think most of these trades I took. If you go back on my YouTube, you can see them. that's what it looks like on the 5-minute chart. You see how like we sweep and then you wait. In this case, my stop is above the high, because if I were to put it at the high, yeah, it would be 12 points. This isn't the best example of a trade, but because yeah, it was an odd one. I had to put my stop above the high. But in most cases, 20 points will be more than enough until you get to the high. Here's another one. You have initial move lower, and then you run up above. There's an important distinction here, and this one is close to, I don't know if I would have taken this in real time, because I don't only look for if I go back to the sweep, I don't only look for the wicks to take out to run out price. So over here, I don't just look for the wicks to be taken out, but also the bodies. So if I were to remove the wicks, so it's only the bodies, I'd also want to see the same thing like this with the bodies. So I want the bodies to actually close above. So now on this trade I just showed you, you see how the bodies just barely close above these bodies, just barely. So in some cases, if it had closed a little bit beneath, then I wouldn't have traded that. I would have waited for a close above the body. That's one important distinction for sweeps. That's why, even though on these charts you see a lot of times where a 5-minute low was taken out, this one, for example, is right here where my mouse is. Draw that along and it's taken out, but it's above 8:30 and midnight, so you wouldn't look to buy, you'd look to only sell. So you'd only look at highs to be run out, and then again the fair value gap presented right there. The first fair value gap, you enter short, minimum 4RR, next 5-minute short-term low. That would have been a trade that would have paid you 4.06 times what you risk. Most of the trades are going to happen between 9:30 and 10. Very few trades happen after 10:30, and maybe only like one trade every 3 months will happen between 11:30 and 12, but it can happen. So it can take a lot of your attention and time. But if you were to just give yourself 30 minutes, and you could still find a lot of trades, because most of them will happen in the first 30 minutes anyway. This was a huge trade. Again, you could see initial run, we come down, we take it out, and then inverse fair value gap, bang. This would have paid you 10.86 times whatever you risk.
Wait, did you actually take that?
We'll see, actually. Let's go see. I don't know. Maybe. If I did, I must have, at the beginning of the year, I wasn't risking the same amount. I was going for 3RR, so it might have been a lot less, not 10.6, but I'd have to go March 20th. No, it doesn't look like it. Maybe, but maybe I took it, but I didn't record it. I don't know if I streamed it either. Yeah, no, I don't know. I'd have to go and look at my actual trade log, which I don't know if I still have that. But some of these I did take. So anyways, I think this one I took. Not sure. Yeah, so anyways, the other important distinction for determining what a good sweep is the bodies. Not just that they close above, but that the price swing that goes in the initial direction, the fake out, the fake initial move, the bodies need to make the most of it. So in some cases, I'll try and find a good example, but in some cases you've got price swings that have very long wicks that get taken out. Like, I'm trying to look for a good example. Yeah, okay, here's a good one. See, I wouldn't look at this price swing. It's above midnight, it's above 8:30, but one thing is, if you measure the wick, so you've got this much wick, and then I'm gonna measure the same thing for the other end of the move, like this. So the entire wicks cover this much area, but the bodies only cover this much. So you see how there's a lot more wick than the body. I don't take these swings because most of the time what this is it's not an initial move lower. Sometimes it can be, and it can look like long wicks, but most of the time the long wicks are just disguising what is actually just sideways price action on the lower time frame. And usually what happens when you have stuff like this is price is going to come beneath it, and it'll have a lot harder time going higher because of all this chopping around, this consolidation. You really want it to be quick, like, you want it to go in your initial direction, fake it, and very quickly come down, and then you want it to go up very quickly. You want it to be excited, and that's kind of like the secret to how I was able to have such a high win rate. When I started doing that, my win rate went from like 40% to 70, almost 80 in some months. So but it takes a lot of patience because it doesn't happen often. And I'm logging a lot of trades here, but I can tell you that I haven't backtested April and May. But in April and May, it was more like 1 trade a week, sometimes 3 trades in a whole month. It wasn't as nice as I see it here. And I don't realistically expect me to take every single trade the way I've logged it here. But just if I were able to take half of these trades, even then, you still make a lot of money. Just to put this into perspective, I'm going to take a table here. Let me delete let me add the filters so you can see the name 2025 model. We're going to go from just the beginning of the year. So far, I've only backtested January to March. At the beginning of this year, the average trade is 3.48. That's what it pays you, times whatever you're risking, which means if you're risking $100, you'd expect every trade on average to give you back $348. Out of 29 trades, if you times 29 times 3.48, it's about 101 times your risk. So if you're risking $100 on each trade, you would have made 101 times 100, which is like 100K, I think. Wait, no, I said that wrong. That's like 10K, I think. 100.
How much are you risking?
Well, I'm just, I don't know, it's up to you. Whatever your account size is, whatever you're comfortable with. But I would say a good rule of thumb for beginners, 1%. Especially if your win rate's high, you could push it a little bit with experience, but at the beginning it's good to start with 1%. So let's say you have a 10K account and you start with 1%, you risk $100 each trade, you would have made 10K, doubled your account in 3 months. And I did double my account last year, but I was risking 5% on a much smaller account. So yeah, it was 5K, so it's not like crazy huge, but obviously risking 5% on a much bigger account. I know you always say it's percentages, but it is psychologically more demanding. And then
it's better to look at it in percentages though than money.
I know, but again, you haven't been in those shoes.
Well, that's why in Top Step I switched it to percentages instead of like looking at a dollar sign.
I know. But even then, when you're down 8 trades, you have an idea of how much you've lost so far, and it will happen. Yeah. You'll have times where you're gonna lose 3 times, 5 times in a row. You don't know what that'll do to you. You gotta go gradually.
That was me.
Yeah. Anyways, this is a market maker buy model. There's lots of videos you can look at on more detail on what this is. You don't need to know what this is to understand how it works. But this is basically the whole foundation on what my model is built on. I built it off 3 cycles. The red area is accumulation, the green area is a manipulation, and the distribution is the blue area. I make money every time we get into a distribution. Or the red area is basically, you could think of it as, in that area you're going to have your initial move, your fake out, your move lower. The manipulation is the part that runs above it very quickly. That gets people excited, that gets people buying price, which gives enough sellers for the smarter money to bring price lower. Now, it's just designed that way by design. When someone wants to sell a large amount and move price is just always going to go in both directions, and it's going to have to fake out a lot. Not all the time, but most of the time it's going to have to fake some people out. If it doesn't do the fake out, then it's just screaming it needs to reprice lower, and it's going to do an insanely huge move. But most of the time it's going to fake things out, and it's going to start a structured move lower. And this is just what it looks like. In every step of the way, you have accumulation, manipulation, distribution. Every time you have a manipulation, think of it as the market gets to breathe. It gets to recollect itself and reprice so that it can continue moving lower. Because nothing just goes in a straight line ever. The markets are trending. It goes up and down. And you just have to see through it in order to kind of decode it and then get in line with it. But, obviously what I'm sharing is very technical, and it might go over your head, but it's relatively easy to follow. You just have to be patient enough to wait for the right sweeps. What I would suggest if you really want to be able to do this really well, is sit through some of my lives. Whether you want to do that next year or you want to go back in time when I actually did stream, sit through some of those days where I lost and where I won. You could pick a random one. You could also look at my Notion and see, there was a big day. What did I do that day? And a lot of them are like hours, over an hour long at least. But you can I'm gonna start doing this too during the holidays. But you can kind of see okay, here I had put in a position. You could kind of try and replicate that as you instead of if you can't forward test, if you're not available to trade from 9 a.m. to 12, you could always go back and just watch the live stream and try and see what I'm thinking, and then take notes and do it follow through with your own chart. But this is an example. This was 3 months ago. This isn't 2025 model. This was NLP. But if you were to go to
You're talking to me.
NLP. Yeah, I was talking to you. Yeah,
What?
yeah. It was a different model. That was a different model. But if you go anywhere around July or...
So this one that you're showing us, this is one that you had just created just recently?
No, I created it in 2024.
Or you were working, perfecting it, I guess you could say.
Yeah, in 2024 I created it. In 2025 I perfected it.
Got it.
Yeah.
So the ones previously that you're showing us here,
yeah,
those was from your older models.
No, the one I've only showed you one
Your
model.
older trading models.
No, all this is one
When
model.
you said LP.
NLP, yeah, that was just a video. The stream
Oh,
I was
okay.
showing you, yeah, that was just me and Noise model. In playlists.
Okay, I got confused.
If you go to my playlist, you could go to trade playbacks, and then just go through some of the recent ones. And these around March 27th or April.
Okay.
And then you can watch the streams on those days, because this one I made 768 USD. That was a huge trade for me at the time. So you could go back, and I streamed this. I'm pretty sure you could go to the 25th of April and then watch my thought process and know how I got
Yeah.
into the trade. That's what I would do if you really want to learn it well. Otherwise, I would just do a lot of back testing, because it really, I mean, honestly, I don't know even if back testing is enough, because you won't really understand what a clean sweep is and what a rough sweep is until you've seen it enough times.
I'd go through it. Yeah.
Yeah, but it's two things.
Forward testing would be
It's bodies closing above, and it's the bodies also being very thick. There's a lot of times where it's just really long wicks and you don't want to trade in that. So like here's a actually perfect example. Let's just say this sweep here had been above midnight and 8:30, so, or beneath midnight and 8:30. Let's say midnight and 8:30 are all the way up here, not down here. You see how like the wicks are super long. We're going with wicks in both ways. The bodies are so small compared to the wicks. You don't want that. You want the entire range of that fake out move to be covered by bodies. And that's like the biggest thing.
so all the bodies have to be thick.
Yeah. I'm looking for March.
So funny. Thickums.
Like the 27th, the 12th, 27th and 12th, I took trades in March. Let's see if I logged those. 27th. I haven't gone to 27th yet.
Can you just give us your Notion journal and then
Yeah, see,
we
I took this
could
trade.
go back on the lives that you took 2025 model and watch it?
Yeah, but a lot of these trades I wasn't taking them the same way. Like I didn't take this one. I don't know why. I'd have to go back and look. Maybe I did. I just wasn't streaming. So yeah, like I can share this Notion journal with you. It's actually already. Let me post it. It's already a website. So you would open the website and then just you could see. Don't look at baby food. Baby food is another model I'm currently researching. But you would just add a filter, top right, filters, name 2025. And then I'm going to be updating it, but go all the way back to January. And you can start to go through it. Important thing is that you... What?
Like, you're still going to trade baby food?
I'm going to keep forward testing it, yeah, because I don't think it's going to work well next year because of the way, the things are going to develop. But, yeah, next year, we're probably going to have a very big recession. Well, we're already officially, like, people are realizing we've been in a recession, but now it's like the media has to accept it. And whenever the media accepts that, like, okay, we're in a recession, the news always goes from, oh, it's a nothing burger to, okay, no, this is bad. So bad news becomes actually bad. And then that's when the market reacts emotionally and we have large moves lower. So we're just waiting for the holidays to be over, basically. And I think people are going to wake up. And the market's going to continue to sell off. We have already sold off quite a bit on, the NASDAQ. So, NASDAQ not too much. We've been kind of sideways, but Bitcoin's the leading indicator. And gold too. Gold's just absolutely going crazy. Bitcoin is down by a lot, so I think Bitcoin's just a leading indicator that shows the amount of risk. And I don't think we can do anything to prevent a recession coming because it's already here anyway. So just people need to wake up. And in this case, whenever you have a recession, it's going to crash, but then you're going to have to transition back to a bull market. And whenever you have this many transitions in a crisis, short-term models like baby food or NLP short-term models like baby food aren't going to work well because you don't have price staying in one range. It's going to be expanding. I don't want to explain what baby food is, but I mean, Nolan, I think you understand. It's just basically very, very short-term trade, like 7-minute trades, or like you just looking for consolidation back and forth price action. Yeah. So, that's not going to work well. But for this model, it's going to be very well if you're patient at least. If you can be patient, you can make yourself available and you can pay attention just for 30 minutes, 9:30 to 10. Then you can make a lot of money with this model. It's just, again, it takes a lot of patience.
2025 model, are you gonna keep going live for those?
Yeah, I'd like to if I can,
Okay.
as long as I can.
Can you also let my sister know when you go live for that?
Yeah, if I could, I'd go live every day, but I don't know what my living situation will be like for the full year next year. So there's some times where I might not be able to.
Yeah.
So yeah. Anyways,
Or I mean, if Kai, are you gonna start trading next year?
Well, I'm trying to get, yeah, yes, the answer is yes.
Okay.
I'm
If
trying to
anything,
get,
would you go
well, I
on
wanted to get
Discord?
into, like starting it now instead of waiting for next year. So doing some like going back to just watching videos again, because I haven't done that in a while with everything that had happened this past several months.
Yeah.
let me actually see if I can find the trades I really took.
You could also like whenever market opens in the new year, you could also like forward test it too. Or like if
I don't even
Leon,
know how to do any of that. So you're gonna have to show me when you have time, or I'm gonna just have to start playing around with the.
can you show her, Bebe?
Forward testing is just watching price. You're not trading to make money. You're just watching what it's doing. So
Okay, so just basically what I've been doing.
you've been watching the charts?
Well, I haven't in like a few months since this move. My life's been a little upside down lately. I'm just trying to get back into
Yeah.
like a schedule, a routine again.
Well, forward testing is just
Just watching the
logging
chart.
the trades. Yeah, watching the charts and logging the trades. Putting certain information like what instrument it was on, the wins, the
Oh,
RR,
okay.
just so that you have a recollection of what happened.
And then you
Oh,
could
I
also actually you could go on a demo
you could do that too,
account and
but I would
take the
suggest
trades and like,
not doing that
practice taking. Why?
because it
That's
could
how I
build.
learned.
Yeah, but it could build bad habits. If you,
Mm.
I don't know, but for some people it can, not for everyone. But if you go on a demo and you start taking trades and you fall in love with that, oh, I'm in a trade, because this model you have to be very patient. Like, look, this is the reality. These are all the trades I took, and I have statements for that I took in reality.
Mm-hmm.
If you being realistic, like you see, I start running into a lot more losses in June. Some losing streaks, like 3-4 losing streaks, so that can happen, but it takes a lot of patience to actually sit through these trades. So if you're on a demo account, you might, like, it's the same thing with fun accounts, like how that build bad habits. You don't take it seriously, because you need to understand that no matter what you trade, I can give anybody a model. It can be so easy, and I'm convinced that no matter who I give a model to, if the rules are laid out and I have proof that I made money with it, they're still gonna fuck it up because they're gonna get emotional. So
But some people
Mm-hmm.
also never learn if they don't try to practice it.
that's true.
Like if I never went on demo, I would have never knew how to place a trade.
That's true.
And then I would have been so scared to even place a trade if I were doing it like
That's true.
with real money.
Yeah, you have a point, but I think it has to come in steps. You first have to start by knowing what you're doing. Once you know what you're doing, now you can say, okay, I did that right and I did that wrong. That's when you can start to actually trade demo. Because if you trade demo from the beginning and you don't know what you're doing, and now you put
Right. So
trades,
just understanding it first before
yeah. So
jumping in,
yeah,
basically.
my my mentor said that you shouldn't even think about trading real money until you have at least 6 months of recorded, like, log trades that you actually forward tested with either demo account or no demo account, because then you get comfortable with the model. You start to get to know the model, and when you do start to trade real money, when you put risks, like our brains have developed over time to see the loss of money the same way we see, or the same way our brain will react when we face death. So in a life or death situation, our brain is going to start thinking the same way as when we put money on the line. Now obviously you don't want to make decisions off adrenaline here. This is very calculated, it's very calm, you have to be very patient and collected, and you got to do things almost surgically, because you don't have much opportunity to get into a trade. Sometimes you'll only have 10 seconds. You have to be able to wait for the sweep, and as soon as you see the sweep occur and the body's closed beneath, you go down that 1 minute chart and you're just like a surgeon just waiting to get in. You can't just be off adrenaline and be like, oh, I messed up this entry, let me re-enter, or my stop was too tight, let me re-enter, or, you know, and then you risk way too much money, and then you start fading the trade, going against your model, and then you blow your account. Like that's happened to me before, and is each time, if you're not properly introduced to the market, you're gonna build bad habits, and you're gonna start to fear, for example, fear of missing out on moves. You're gonna take bad sweeps because you think they're gonna work, and you're gonna be fooled because you're just being emotional and craving wins like an addiction, rather than actually being a professional and just accepting that you lose money. The biggest thing about trading, the biggest like make or break, is really, do you accept the risk? Like trading is risky. You're gonna lose money. There's gonna be times where it's gonna be bad for you, and you're gonna have 5 losses in a row, even 10. Some models I had, there was 14 losses in a row in the month of June this year. So you have to just be able to sit through that, and you don't know how you're gonna feel. You can think about how you're gonna feel, you can hear other people talk about it, but you won't understand it until you actually go through it, and that's when you start to think differently. Like Noe always says, oh, it's just percentages, blah blah blah. But even she's broken rules just after 6 losses in a row. So
Yeah.
if you imagine 12 and she wasn't risking all that much either, you know, it's and she has me that's always talking to her, reassuring her, but it's really comes down to, do you accept the risk? And most traders that start, the reason why so many of them fail is they come into it with the wrong mindset, with a more modern mindset about money, and they don't think of money the way you need to. They don't want to lose money. They come into trading wanting to make money. Not, you know, you need to be good at losing money. You can't be good at making money in trading. You have to be good at losing money and managing your losses, rather than actually be focused on just the upside of it. The wins are a result of the process of staying emotionally, you know, anchored, rather than performing well. So performance does not equal success in trading. It's all about, you know, how to remain calm and accept that you're essentially placing your money in the market, paying the market to extract a salary long term. And every time I have a loss, I just see it as a business expense. Like, okay, I just paid so that I invested so that, you know, in the future, continuing the same process, I can make money.
Right.
Yeah. But these are the trades I in reality took. So in like the month of March, I only had 3 trades that I took. I don't know why I only had 3, but I must have missed a lot of trades. Also, I wasn't trading it the exact same way. I think my average range was way tighter than what it actually was, because the average range I used was for the year of 2024, and in 2025 we started to see a lot more 200-point ranges, and I'm pretty sure that's why I don't have as many trades at the beginning of the year, because my average range was a lot smaller. So I didn't have the indicator that I have now that kind of shows me you know, when to stop trading the red area. I would always just stop trading at 180 points, which would have been like almost every single day. So I think that's why I don't have as many trades logged, but I could have done a lot better if I had perfected it earlier. But I mean, it's perfect now, so yeah.